Today on the Playbridge podcast, we are welcoming Julie Wroblewski, the co-founder and managing partner of Magnify Ventures, which debuted a $52 million fund investing into the care economy. Before launching Magnify, Julie spent over a decade as an investor and advisor with institutional scale family offices and mission-focused organizations, including Pivotal Ventures, led by Melinda French Gates. Julie is a Kauffman Fellow, member of All Raise, and a frequent speaker on purpose-driven venture capital, gender lens investing, and the care economy. Earlier this summer, we were very lucky to have Julie on our very own female founder and investor panel in Santa Monica, which was amazing. So Julie's so excited to finally have you here on the show today.
Excited to be here. Thank you for having me.
To kick it off, you're the co-founder and managing partner of Magnify Ventures. So if you could start by sharing just a little bit about Magnify and why you decided to launch the firm.
Yeah, so Magnify Ventures is an early stage venture capital firm. We invest in pre-seed and seed stage companies in the care economy and family tech. So for us, that's any technology that touches modern family life, from pregnancy and parenting, the future of work, to aging and end of life. We're mostly software investors, also tech-enabled services. We don't invest in biotech or life sciences. We don't really do hardware or consumer products for the most part. So really early stage companies will write 250K pre-seed checks all the way up to 1.5 million at seed, and very thesis driven. When we launched, we like to say we were the first venture capital firm to invest in technology for families, which we thought was both a huge market opportunity and overlooked by the venture capital ecosystem.
To dive in a little bit deeper and maybe help us understand exactly what you guys are investing in, can you share maybe one or two investments that your team has made and why you're excited about those investments?
Yeah, well, on the earlier stage side, we're investors in a company called Milo, which is an AI-driven human-in-the-loop co-pilot for parents. So basically taking all of the information in parents' heads, whether that's school schedules, meal planning, and putting it into a tool that helps to organize information and serve information up for when parents need it. We were really excited to invest in that company because we saw it as a way that technology can kind of move in and make parenting and family life easier, addressing the huge mental load that parents face in raising children and managing a household. I think we've seen a lot out there in terms of, tools related to the labor required to manage a household, whether that's food delivery or things like that. But this was a really interesting solution around the mental load. So very early, you can sign up for the product. There's a very large wait list right now, but she is slowly moving people off of it. So that's Milo, which we're really excited about. The other company, which is an example from our portfolio, is later stage, and that's Papa. Papa is a platform that connects older adults and their families to companions called pals who come into the home and provide support with transportation, grocery shopping, everyday tasks. And in doing that, really address the huge wave of loneliness and isolation that older adults in this country are facing as more and more of them age in place at home. Papa is in all 50 states in partnership with every major health plan in the US, and I'm really proud to see that team and that company grow and impact millions of lives, but also pave the way for new companies in the aging innovation category.
So as you mentioned, you guys are the first firm to really focus in this space. How and why did you decide that there was a big opportunity in the care economy?
Yeah, well, now we're not the only. There's a lot of firms out there, and even when we were launched, there were firms and friends of ours who were, looking at care as part of a broader strategy. But you're right. I think in the last couple of years, there's been more and more focus and awareness about the care economy. And I really came to this space from two angles. First of all, I was a professional caregiver. I worked in nursing homes and memory care units as a teenager and through college, and really saw sort of the growing need for technology to improve care for older adults. And then more recently, when I was working for Melinda French Gates, we were building a strategy around caregiving innovation in American family homes. And I started to see really incredible, experienced entrepreneurs moving into the space and starting to build really category making companies. So it was a combination of my own experience and history, and then really just being in a position where I could see the market opportunity that was emerging and wanted to spend my days working with founders.
To that point, help us understand your career trajectory and how you ended up launching your own firm.
Yeah, well, I always laugh whenever people are talking about this very linear path that they've had into what they're doing, which I think is so common in venture capital and startups. It's the story of I did this and then I did this and then I, planned this out the whole way from A to Z. And my path was not linear. I mean, I have been a capital allocator for most of my career, and I've always been focused on how capital can drive innovation or shape markets. So I started my career in economic research at the Federal Reserve Bank, working on research and support for economists that were setting monetary policy. So kind of the highest level of market analysis you can go, and sort of move down from there. I went to graduate school for public policy and public finance in particular, spent a little time in asset management, and then really became very interested in entrepreneurial investments, and spent time working for both the Gates Foundation, Melinda French Gates, and other family offices to think about how to use private capital to stimulate and support innovation in areas that were really important to people's lives, whether that was in caregiving, areas of women's health, and eventually just decided to narrow my focus even more and launch a firm where I could really spend my time looking for companies in care and founders that were going to build this category. So definitely not a linear path, but sort of worked from the macro all the way down to about as micro as you can get.
Well, that definitely gives me a lot of hope because I've had a far from linear career path. So I love to hear stories like yours. I would love to understand a little bit more about how you first broke into venture capital. And now that you're on like the hiring side of the table, what advice would you give other people looking to break into venture in today's world?
Yeah. Well, earlier in my career in venture, I won't go all the way back, but I was actually investing as an LP when I was in my previous role. So investing in women-led venture capital firms. And in that role, had a lot of insight into how firms are built, portfolio construction, and really what it takes to both raise a fund, but then make investments and be a value add investor. So I had an opportunity as an LP to learn from really incredible female investors at the super early stages all the way to growth. And then from there, I had the opportunity to start making direct investments and sort of build my path from there.
Since you've been on the LP side and now that you've raised your own fund, help us understand what it actually takes to launch your own fund and maybe any advice you have for other emerging managers.
Yeah. Well, I'll take the second part first. So in terms of advice, I think getting exposure to investing, whether that's making angel investments yourself, whether that's internships, working alongside someone who maybe is themselves making angel investments, but really getting that direct and experience and exposure, and just getting reps in the process of going through diligence, building an investment strategy, seeing a company go from pre-seed into later stage rounds, what that means in terms of follow on and, the value you need to add as an investor. So the first thing I think is really exposure and experience to the investment making process, whatever that looks like. I think, that can take a lot of different forms. And so I think being creative and open, especially in this market, right, where I think the, opportunities are a little bit scarcer than they were a couple of years ago, just given the fluctuations that we've seen. And in terms of what it takes to build a fund, I mean, I think for us, for my partner, Joanna, and I, just a lot of hustle and, determination and kind of a realization that, you have to go through a lot of meetings, you have to take a lot of no's, whether that's, forming a startup or building a firm, and not take it personally, and just, keep going until you find the best path forward. I think the other thing I would say too is, you can try to plan out the whole fundraising process and plan out building a firm, but it's going to change anyway once you get into the mix. So having enough of a plan, in terms of what you're going to build, but then, being flexible as you start to get into it, whether that's like, in, portfolio construction, evolving your thesis as you get feedback, thinking about how you might build and structure your team. That's all going to change really quickly. So not being too stuck on exactly, what the end product is going to be, because it's going to change.
Tell us, one, how you met Joanna, and then how you decided she was the right partner for the firm.
Yeah, well, I met Joanna sharing an Uber together, leaving a conference for women in BC. I was standing on a curb waiting for a car to the airport, and these GPs were in a car and they stopped and they were like, they were doing a ride, and I said sure. So I jumped in the car and Joanna was there, and then stayed in touch with her after that, and kind of slowly began a conversation about building a firm and what that would look like. And for about a year, was just in conversation about what it would look like, what our roles would be, looking at deals together. So it was quite a long process. I think there were two things that really, for me, were the triggers to get into partnership. First of all was, we just have shared values as people. Yeah, I feel lucky every day to work with someone who I think, treats people well, is honest, has very high integrity. I just deeply admire my partner as a human being. And I think that's a great starting point when you're in a two-person partnership, which is basically a marriage. And then the second thing is we're quite different as people. We laugh because we both have blonde hair, and I think sometimes people think we're quite similar, but we're actually very different, in terms of our networks, the types of founders and deals we're drawn to, even just how we approach processes, whether that's diligence or managing the firm. So that's really good because I think, no matter what you're doing, I think having diversity of thought and approaches, is really important. So those two things brought it together for me.
I feel like choosing your business partner has got to be one of the most important decisions that you will ever make. So amazing that you have found a perfect fit. Can you share a little bit more about your and Joanna's strategy for raising Fund One and how you shared your story and presented that to potential LPs, what types of LPs you went after, anything you can share in that strategy?
Yeah, so we did in some ways try to reverse engineer our fundraising process, knowing that things would evolve along the way. So before we even went out to fundraise, we, created a massive database of all the LPs we wanted to go after, kind of who was going to lead, what size of investments we either knew them to make or thought they would make. So just kind of mapped out the ecosystem and our network to try to think through what would our LP base ideally look like. And we secured an anchor, which was really critical to the process. And then we went out and began to just soft sound the idea of the fund and the thesis, and gathered feedback to your question on, how did we do it? And that was really helpful because, we started with friendly LPs in our network, and we would just say, this is our portfolio construction. What feedback do you have? We're not yet fully pitching you, but just want to understand, how would you think about this? And this is how we're pitching our thesis. So yeah, that's how we did it. And then we just adjusted along the way. We were raising during the pandemic, so we weren't meeting with people in person. It was all over Zoom. We didn't close a single LP in person, I don't think, besides maybe one or two. And we were also pitching a thesis that was really relevant. We were talking to people about caregiving, the challenges of, being in the sandwich generation, raising kids and taking care of an older adult. And people were living this reality in their homes. And there was really a bright spotlight on our thesis. So I think we were fortunate to be raising in that moment in that way.
Yeah. All strategies that I feel like even female founders listening today can take and apply to their own fundraising processes. So thank you for sharing. So you've obviously been part of a ton of deals over your career. Can you help us understand a little bit more about your due diligence process and what you are really looking for in an investment?
Yeah. So for our due diligence process, once we take a first call and decide that we're interested, both Joanna and I are engaged in the diligence process. Usually, one of us is leading and driving that, but we are both engaged in diligence. And every firm's a little different, right? Some of them, it's one partner just kind of takes it, and we certainly have a lead, but we're both engaged. Us, like, the diligence process really begins focused on the founder and thinking about, is there a founder market fit? Does this founder or set of founders bring together somewhat of a foundation of what's needed here? And then do they have an idea of what else they need to bring to the table? It's not all going to be there at the earliest stages. So really evaluating founder market fit, understanding of blind spots and how to build out a team to be able to even go after the vision that they're pursuing. And we've also found that having someone on the founding team with experience working in an early stage startup or a close advisor is really critical in those early phases. And if a team doesn't have that, we often engage in conversations like, how are you thinking about that? When will you bring on early stage operational expertise? So evaluation of the team is one. Because we're so thesis driven, we're usually pretty quickly able to look at a deal, whether it's like in childcare or aging, and have somewhat of a sense of it, if it feels on the right track based on what we've seen in the market, knowing that will evolve. So that's kind of where we start. We also do pretty significant reference checks on all the teams that we invest in. We'll oftentimes pull from advisors and experts in our network to help provide additional expertise. I just did this yesterday on a deal in the behavioral health space. I had a conversation with a board member of mine who has seen tons of deals like that. So pulling from our network. And then we have an internal discussion and raise and surface any questions and make a no go decision before we really get into a discussion of terms, price, things like that, in any deep sort of way. And then that's about it. We are a small team, so there's not a very formal or long process, but it is still a pretty involved process where everyone on the team is playing a role.
Other than the founding team not having past startup experience, are there any other red flags that you've seen over your career that would maybe be like an immediately no for an investment, or any warning signs of maybe this won't be a successful company?
Yeah, the first I would say is we want to see a founder who's willing to be open and honest, or maybe transparent about where they are with things, where they are with the round. That's really important. These are deep, long relationships if you're an early stage investor. So a flag for us sometimes is when we feel like there's not transparency, or maybe we're hearing different information than what we're told. So that's one. I think second is an understanding of blind spots. Being a founder, even on a team of co-founders, it's really important to understand who else you're going to need to bring to the table, and where your blind spots are. If you're selling into healthcare and you don't really have that experience in the team, really understanding how critical that is. And then maybe the third example I would say is just being aware of the competition around you. I think if you're building a company in a very crowded space with other companies that have already raised 10, $20 million, you really have to understand your competitive advantage within the landscape of other companies in this space. So that's another thing that is a bit of a flag if we don't see that research and awareness already being done.
Shifting gears a little bit, I'd love to learn a little bit more about your experience and your role in launching Pivotal Ventures, the venture arm. Help us understand how you first got that opportunity, and then, what the strategy was for the venture arm there.
Yeah, so I was working for Melinda French Gates as an advisor, and supporting her investments and strategy work at the Bill and Melinda Gates Foundation when she decided to launch Pivotal as an entirely separate investment company. So I came over quite early to help launch and lead the venture capital strategy there. I've grown a lot since I was at Pivotal, and are having really, remarkable influence in a number of domains, in philanthropy, policy, investing to support women's power and influence. My role was really to help create the foundational strategy in venture capital, starting with investing in women-led venture capital firms, including women who were building and scaling new firms across a variety of strategies, but really at the early stage. And then, later looking to leverage those relationships to make additional investments, in addition to supporting those managers as they grow and scale their platforms. So that's sort of what my role was. I think what's really exciting about it, and I think sometimes isn't talked about enough in the context of, why we need more women in venture. I mean, of course, there's returns to society when women are, managing capital and what they invest in. But I always think about, what are the innovations that we would be seeing in the world, or that we would have seen if we had a more diverse set of thinkers allocating capital. I focus on a category, as I said at the top, that's been long ignored. And we have areas like childcare, for example, where it's only been, the last couple of years that we've seen a large wave of startups going into that area. Or, huge areas of women's health like menopause or reproductive health that for a long time have been overlooked or seen as small areas of market opportunity. So, that was a huge motivation for me, and why I was really excited to be part of that work. And I'm just thrilled to see the team there continue to grow the strategy and make a positive impact in the world.
Incredible that you were part of building such an amazing organization that all of us admire and look up to. Over your years of experience, what have you seen really move the needle and help either more women get into VC or more female founders get funded?
Yeah, I mean, I think one thing that's been really surprising to me over the last 5 years is to see more senior GPs, including women, but also some of the men, to create pathways and just take the phone call or provide opportunities to women who are looking to break into venture capital. Two of my mentors are men and very senior in venture capital, who've been really helpful to me, and just making sure I'm supported as a GP building a new platform. But I think they're also very aware of the challenges that women face in raising new funds. So I've seen the engagement of the most senior players in venture capital continue, which has been a huge help in the space. Second is, I think there's at least more awareness of how small the numbers are of women in venture capital and venture-backed startups, and the unbelievably small share of venture capital dollars they're getting. So I think some of the research and awareness that organizations like Allraise and others have done have also been really helpful in creating a broader understanding around that. But there's still so much to be done, right? Like, that's just the beginning. It's still unbelievable that women get 2% of venture funding, that women as partners in VC are less than 15%. I don't know, you probably know the latest number is at 11-12% at this point. So not even close to where it should be, but I think at least we're beginning to move in the right direction. But creating those pathways, getting those who are in positions of power engaged in solutions, I think are good starting points.
Yes. Well, excited to be part of hopefully moving that needle over the next
Absolutely.
few years. This is a very selfish question for myself. For someone that just got into venture capital, what advice would you have for newcomers in the space to build a successful career?
Yeah, I think, in watching you're doing it in terms of building a large network of founders, other investors. At the end of the day, a lot of this job, whether it's pre-seed and seed investing, is really, being able to build and leverage a diverse network, and get access to deals and ideas that are outside of the mainstream or really exciting emerging deals. So getting out in the world and doing things like the event that we did together, putting this podcast out there, building your own brand and network, I think is hugely important when you're at the earliest stages of things. I also think if you can find a way to join a professional network in or adjacent to venture, can be really helpful. I'm a Kauffman Fellow, class 22. I'm very proud. And that is not only an organization that I've learned a lot through, it's also a source of support. I'm on a WhatsApp where we all ask each other questions every day, like, hey, I'm dealing with this. I'm looking for this. Can anybody help? So finding a professional network like that, I think, is tremendously helpful. And then maybe the third thing I would say is really self-educating, especially on some of the more technical aspects of the industry. I think that, if you watch TV or you just read online, a lot of venture capital seems solely, relationship based, and which it is. But there's a lot to be learned in terms of portfolio construction, cap table analysis, really, how you think about ownership over the life of a company. And there's some great online courses. Kauffman Fellows has a course called Kauffman Deals. I know there's a lot of, great free resources out there. So really self-educating as well, I think, is another piece of advice that I would give, especially since, outside of a few schools, there's not, a lot of curriculum out there in higher education. So you have to be self-motivated in that way.
Definitely, as a recent MBA graduate, like there was very little curriculum on venture capital, which I find so interesting, because if you're going to find it anywhere, you would think it would be there.
Yeah. I actually ordered a book that I saw on a syllabus in a venture capital class at a major university. And I was just kind of curious, I was like, oh, maybe this will, remind me of things or help expand my thinking. And as I was reading, I was like, this is not how it's done at all.
Yeah, that's terrifying.
This is actually, some of it's relevant, but this is not like what we're doing. So I think, making sure that you're supplementing whatever formal education with practical experience and insights from other investors. That's why the Kauffman Deals class, for example, is a really good resource, because it's active, very senior investors who are sharing their knowledge.
For professional organizations like Kauffman Fellows, and then also I know you're a member of Allraise, I believe. How do you get involved in organizations like that?
Yeah, I mean, I think just doing your research and seeking them out. I know I'm not in YPO. A lot of my friends are and say fantastic things. I don't think there's necessarily one answer that's right, but oftentimes even asking to volunteer, sitting down with people who are active in those organizations, and just getting engaged even before you get to the point of asking to be a member, but just putting yourself in those rooms and trying to find a way to be helpful or network, I think is the first place to start. When I pursued Kauffman Fellows years ago, I just, went out to dinner with a couple of existing Kauffman Fellows, and I said, I'm curious to learn about your experience. How can I get engaged? And, kind of got deeper and deeper from there. But I think that's one place to start, is with people who are really active and engaged in those organizations.
So for this season of the podcast, I'm asking all investors to debunk a venture capital concept of their choosing. So can you share your concept and a bit of an explanation of it?
Yeah. I think, impact investing is a very controversial and oftentimes misunderstood concept in venture capital. Interestingly, when we were pitching our firm and our thesis, the care economy and family tech, oftentimes people would immediately assume that we were an impact firm, specifically, open to concessionary returns. I think there's some bias there in terms of how we think about anything that involves family or children or parents or older adults. So that was interesting. We sort of had to say, hey, we're impact in terms of the investments that we make will have an impact in the world. We're committed to that, and that's important. But we're financial investors as well. We want to invest in companies that are going to have outsized returns, and oftentimes have referred to purpose-driven or mission-driven investing, just because of some of the challenges that are out there when people start talking about impact investing, which can be concessionary or can be market returns, depending on kind of how you're defining it and using it. And I also think there's a lot of conflation of terms in this space too. ESG is a different thing than impact investing, though they're related. So I think that's one that will hopefully continue to see more discussion and better to come, especially as venture capital expands, and different types of companies and firms engage in more socially conscious investing.
As we start to wrap things up, can you share a female founder, investor, or leader who inspires you, and a bit about why?
Yeah. I'm inspired every day by the founders that I talk to, who are, brave enough to take a leap to start a firm or a company. I guess the one that comes to mind, because we were just talking this morning, is a co-founder and CEO in our portfolio, Alexandra Mysore, who just launched an early stage company leveraging AI to improve the estate settlement process for families at end of life. And she's inspiring to me because she is a total force of nature, just one of those gritty, determined founders. First time venture backed founder. You wouldn't know it if you talk to her, because she's so well studied and knowledgeable. And I spoke with her early in her fundraising process, and it was just really clear to me that she was going to do it. She was going to run through a wall if she needed to build the company that she was envisioning. And, she's now doing it. She closed her round late this spring. She is, already built a product. She recruited an incredible co-founder, Hugh Tomasia, and she's, really doing what she said she was going to do. And, just really very inspiring to see that and have the opportunity to partner with a founder like that, who I think is going to, change the world and build an incredible company, but also is just an inspiring human being and woman to have the chance to work with.
Amazing. Thank you for the shout out. Maybe she can be on the podcast next.
Oh, yeah.
Awesome.
I don't want to commit her to it, but she is a great leader and personality. So you should put it out there and ask
Amazing.
her.
Yeah, putting it out in the world. And if she's up for it, I would love to have her. And then finally, where can our listeners find you? Where can they find Magnify Ventures?
Yeah, so LinkedIn for me and Magnify Ventures. We also have a Medium page that you can find either on Medium or through our website, magnify.vc. And yeah, we post updates from our firm and from our portfolio companies, both on Medium and LinkedIn.
Amazing. Julie, always amazing to see you. And thank you so much for joining the show.
Thank you for having me. This was awesome.